Let's explore the MACD indicator. This lesson will guide you through the fundamentals of the MACD indicator. You'll see why MACD is more than just a crossover tool. It's a dynamic way to read the strength behind price action. By the end of this lesson, you'll know how to read and apply it. You've seen how MAs can smooth out price and confirm trend direction. But what if you want more insights? That's where MACD comes in, which stands for Moving Average Convergence Divergence. MACD compares two moving averages to show whether momentum is building or fading. It is made up of three components. The first element is the MACD line, which shows the difference between two moving averages, usually 12 and 26 periods. When the line rises, momentum is strengthening. When it falls, momentum may be fading. There is also the signal line, a moving average of the MACD line. It acts as a smoother, giving clearer entry and exit signals when the MACD line crosses above or below it. You can also see a histogram. It is a visual bar chart showing the distance between the MACD line and the signal line. A histogram helps traders see at a glance whether momentum is strengthening or weakening. Bigger bars mean stronger moves. Shrinking bars suggest momentum is fading. Select the match elements of MACD. Each part of the MACD plays a specific role in helping traders understand momentum and confirm trends. Can you match them correctly? Shows momentum strength. MACD line. Smooths entry signals. Signal line. Compares two averages. Histogram. Stock. Excellent job. You now know about the key parts of the MACD. Now, let's break them down one by one and see how they work together in real trading. One of the most common uses of the MACD is identifying crossovers. When the MACD line, 1 crosses above the signal line, 2, it often signals growing bullish momentum, a possible buying opportunity. When the MACD line, 1 crosses below the signal line, 2, it may suggest bearish momentum and a possible sell signal. But not all crossovers are created equal. The context matters. A bullish crossover during an uptrend can strengthen the case for a trade. But if the price is stuck in a range or near resistance, that same signal might be weak or misleading. Let's check your knowledge. You now know about MACD crossovers. Quiz. If the MACD line crosses above the signal line, what does it usually signal? Explanation. Nice. A crossover above the signal line suggests bullish momentum and often points to a buy setup. The histogram shows the distance between the MACD and the signal line. If the histogram is above the zero line, it shows bullish momentum. If it's below the zero line, it shows bearish momentum. Bigger bars mean stronger momentum. Smaller bars mean weakening momentum. When the MACD histogram bars expand upward, it indicates that bullish momentum is strengthening. The bigger the bars, the more powerful the ongoing trend. Traders often see this as a sign to stay with the trend or look for continuation setups. Traders don't solely rely on just one part of the MACD. They analyze the MACD line, the signal line, and the histogram together to fully understand market momentum, trend strength, and potential reversals. So, let's practice using MACD. Can you read the full MACD story? Look carefully at the MACD chart around late November to early December. Quiz. Using the MACD line, 1, signal line, 2, and histogram together, what is the best interpretation of the market situation? Explanation. Exactly. The MACD line has crossed below the signal line. The histogram is shrinking and moving below zero. All signs of weakening momentum and a possible trend reversal. Great job. Now that you can confidently read MACD signals, here is one more thing. Before you act on a signal, make sure the MACD line moves clearly up or down. Check that a real crossover between the MACD line and signal line has happened, not just small noise. Look at the histogram. If it's growing, the trend is getting stronger. If it's shrinking, momentum is slowing down. See where the histogram is compared to the zero line. Above means bullish strength. Below means bearish pressure.